I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Richard Buxton, Fund Manager of the Merian UK Alpha Fund. You've been managing this fund for 10 years now, so you must have seen some highs and lows. Would you like to talk us through a couple of those with maybe a spectacular fund pick and a slightly less spectacular one?
Well, yes, and the predecessor fund, it's 17 years, which is about a third of my life, I think. Yeah, of course, there have been all sorts of ups and downs. I mean, no one will forget the financial crisis 10 years ago. That was quite extraordinary. We've been through setbacks and so on before, but that was really quite something. What was actually terrific about it was that shares fell to such extreme low levels that, you know, I was adding to stocks in the portfolio like Next and Burberry, where you could not help but know you were going to make money if the world survived. And sure enough, we had an extraordinary year the year after the crisis. You always remember the good ones, but you remember the bad ones as well. I mean, I remember by the time we finally sold Thomson Reuters, we'd actually made, I think, about 10 times our money from when we originally invested in Reuters, and then it was merged and so on. Party gaming fell 70% the day its business model was made illegal. There are companies I've backed where you've ended up losing 90% in the course of your investment. So the great thing is you never stop learning in this business. So you continue to be faced by new challenges, new opportunities, new circumstances, and that's part of the fun of it. You're always seeing new things.
And you've said in recent past that, you know, a well-known fact that the UK stock market is very unloved, not just locally, but by sort of international investors. Do you still think it is unloved and that there are opportunities there? And if so, sort of what areas of the market are you seeing those opportunities in?
Very much so. I mean, we can see from all the global fund manager surveys that people are way out of the UK equity market. A lot of UK investors have sold out aggressively in favour of global funds. We have a huge skew within the market between much more highly rated growth stocks, and I've got some of those, but a lot of very undervalued, you know, cheap stocks. The financials are some of those. Obviously, low interest rates, low bond yields is a real headwind, but it's not always going to be like that. So I continue to think that firms like Lloyd's and Barclays, you know, represent real value for the longer term investor. I think what's really interesting is that international companies are still coming and buying UK companies, and even just strategic investors. I mean, Hong Kong-based billionaire Li Ka-shing came in to buy pub company Green King just a few weeks ago. Now, he wasn't waiting for Brexit. He wasn't waiting for some final lurch down in sterling. Sterling is 25% cheap against the dollar on any long-term basis. So, you know, overseas investors can see the value on offer in UK assets priced in sterling. And I think I'd be backing them relative to perhaps the global fund management community in its shunning of the UK.
Another thing which I know you've talked about recently is the extension of the economic cycle. And it's been, you know, going on for a long time. I've been hearing about late cycle investing since about 2015. Can you explain sort of what your feelings are on that as we sit here today?
The reason everyone is so concerned about it has to be late cycle is the average economic cycle is about 7 to 8 years. And here we are 10 years on from the financial crisis, and the sort of expansion has continued. But my point is, it may be longer, but it's been at about half the pace of usual economic cycles in terms of the degree of growth that you've actually had. Economic historians have always said post a financial crisis it takes an awful lot longer to get back to normal. You know, it can be 15 to 20 years to get back to normal. So this is why I think, you know, yes, it's a long aging cycle, but it's been one that's been so much more subdued than previous expansions that I see no reason why, particularly with the Fed now cutting rates again, this cycle doesn't get extended, you know, for at least another couple of years. Bull markets don't die of old age. You know, they have to be brought to an end by something, by some shock, crisis, interest rates going too high or whatever. So for me, no, this is still an environment where we can find interesting companies that are doing good things. They're investing in stuff. The UK economy, I think, post-Brexit, we can lift the uncertainty, could well be, a very buoyant economy for 2 or 3 years yet, which has got to be of benefit to UK shares.
And it's always nice to talk about a sort of a household name, and having looked through your portfolio, you've got a stock called Pets at Home, which I think will be known to hopefully some of the people watching this video. Tell us why you like that as an investment case here today.
It's clearly a retailer, though it's got a great online business as well. So pets and pet food, and then all that which goes with it in terms of grooming for dogs, veterinary services for all types of pets. Clearly this is something that cannot be completely disintermediated by the internet. Obviously you can be buying pet food online and they'll happily sell you that, but ultimately people are going to still come in to the shop to both buy animals and to get them looked after and so on. It's a very resilient business. People will, in a downturn, they will still continue to look after the pets and the pooch and not actually, they'll not spend money on themselves relative to spending money on the pets. So it listed a few years ago. In fairness, it had some difficulties, firstly with the online business. It got pricing a little out of line, and then actually the breakneck pace of expansion in the veterinary side of the business, they slightly overdid it. They've completely addressed both of those issues, and that's why the shares have been performing so well this year, that they're really back on track in terms of delivering the growth potential from those two parts of the business.
Richard, thank you. That's very interesting. For more information on the Merian UK Alpha Fund, please visit chelseafs.co.uk.